Welcome to an episode of Singapore Real Estate Explained, where we break down numbers and figures to make real estate investments simplified. So today is back to myself, Christiano, me and me alone. And what we're going to do today is to break down one of the most interesting news that came out recently, a recent report that was done by UBS in 2023. Which is known as the Property Bubble Index Report. So it's fresh out from the oven just 2 weeks ago, and it's very important to take note of because it shows us what exactly is the fundamentals that's governing Singapore real estate and real estate globally. And without much further ado, let's go. So today, this bubble index is a key element that was just announced, as I mentioned 2 weeks ago, to see how exactly Singapore property bubble and also other countries' property bubble fare over the year of 2023. But before we move on to this report, let's understand a little more what exactly is a property bubble. Property bubble, or rather price bubble, is known as a recurring phenomenon in property markets where basically how a bubble or like a balloon where you inflate it and make it bigger and bigger, when it becomes too overinflated, a bubble is formed and subsequently if the bubble is too large, it will burst and this causes price to crash. So this is something that is very important to keep note of because by looking at whether there is an existence of a bubble, we can see whether a property market in a country is overinflated. Alright, so let's take a look at the methodology. Make it simply put, how they trace the bubble. Is due to two main metrics. One is based on the valuation of the housing market, what is the pricing, in comparison to their own economic distortion, which is done by two things. One is by the income and whether they're over leveraged in terms of borrowing. So this is a very deep report, but I'm trying to make it as simple as possible. Alright, so one thing we look at property bubble index is to look at the number, which you can see over here. So how you read this chart is, if the number is above 1.5, you can see there's a red zone over here, it means there is a property bubble and likelihood of it bursting is very high. But what happens is, if you go below 1.5, then that's when there's a slightly overinflated value, overvalued, but there's not much a bubble. But you go below 0.5 means it's very safe, very fair value, unlikely to even have any kind of overinflation or bubble in the first place, which means it won't be crashing for the price. And one thing to take note is the higher the bubble, as I mentioned, the more likely the price may crash. So if you look at Singapore, very interestingly, in 2021, it's going at 0.5 to slightly overinflated, but still closing to the fair value portion, which is interesting because if you know, Singapore prices have been rising from 2020 to 2021. And the most interesting fact is that in 2022, our bubble, although the price of property actually went up, because our economic fundamentals, our income has been rising in tandem, and also the global economic output is also strong. That's why in 2022, the number still lay at 0.5, which means the bubble actually shrunk, less likely to have a collapse. And in 2023, even though the property market from 2020 all the way to 2023 went up by 60+%, for the private market, everything in general, what we notice is a Singapore property bubble actually shrank and now it became fair valued at 0.47. Later we'll break down the numbers for different countries, but for this is one thing that we trace very carefully, which means Singapore property bubble is close to non-existent. Of course, there's only one aspect we look at in the global market trend, in the macroeconomics approach towards property investment, but the other multiple factors that we look at based on not just this, but also in terms of our balance sheet, understanding what exactly is the fundamentals of Singapore leveraging power. All these things are things that we track. But today we just make it short and sharp, simple to look at just a property bubble index. But we can find out more, of course, to approach any of our brokers, and we're more than happy to share the in-depth research and report with you. Alright, so next up, let's take a look at the difference between 2022 and 2023 for property bubble index. While Singapore property bubble index actually shrunk, they call it a deflation, which is very healthy. What we notice is multiple countries, the bubble risk cities actually dropped from 9 countries all the way to 2, which is a good sign. It means the global economics because of high interest rate environment, because of the fact of a deflation on the bubble where price suddenly went up by 20 to 30%, we noticed that the global market for property have been more equalized, have been more deflated in terms of property bubble. And with this, this is something that we came to a conclusion. You can see on the right hand side over here, 2022, okay, when we see what exactly is the bubble, okay, if it's red means there's a property bubble risk, orange means slightly overinflated, and green is very fair valued. So you can see most of them, while some remain status quo, okay, the others like Tokyo still has a high bubble risk. A lot of them from yellow zone have moved to the green zone, which is a healthy sign in terms of property bubble inflation risk is getting reduced in this process. And one thing we have to take note is that this is only a sign of unlikelihood of property dropping in price. But to see whether it grew in price, there are other factors we have to look at. But in general, you can see, due to these three conditions we'll run through later on, we notice that the deflation property bubble is existent not just in Singapore, but also across the globe, which is good. Means unlikely to have huge economical risks in terms of overinflated bubble like that in 2008. Okay, so next up, let's take a look at the Asia Pacific economic trends for property bubble. So you can see, in terms of bubble index, okay, let's look at Hong Kong and Singapore. Okay, what we notice is something in common for these two countries is that both their housing supply cannot keep up the strong local and international demand. And real estate prices have risen by 15% since then, despite tightening in regulation. Okay, and this has put in perspective of rent also, which has in fact increased by 40%. And this helped to counter the higher interest rate environment that have risen over the past few years. So it helps sustain the bubble in terms of deflating it in the process, because people still can pay their mortgage and people still can use the rent to pay their mortgage, which is the add-on. And one thing to take note is there's a deflation bubble even in Hong Kong side. For last time, there's a property bubble risk to now a deflated bubble right over here. And Singapore have been triggering ever since 2015, where it is almost a negative bubble all the way up, it rose up, but it's still under fair value because our economical trend of our GDP can sustain the growth of the property prices while supply remain low, the demand continue to rise over the years. So this is something that we have to trace, which is a big topic, but for now, let's focus more on the bubble itself. Okay, so to sum up the topic of property bubble, okay, in this entire report, there are 6 key points we had to take note. So the first point we have to note is that prices are in reverse gear. Okay, which means bubble has, instead of inflating, which is like gearing up, getting bigger, it has gone to a deflated bubble kind of a phenomenon. And this is due to 2 main points, which is the inflation and interest rates in the past 2 years. And this caused a decline in the imbalance in the housing markets, which in other words, it causes the market to be more stabilized. It causes the market bubble to be deflated. And the second thing to take note is because of this, there are a few cities at bubble risk, which I mentioned just now, from 9 cities in bubble risk dropped to 2. And only a few countries like Zurich and Tokyo, the bubble risk is still present because they have very low mortgage rates, which is something we will figure out later how it affects the property market, and inflation rate hasn't been high. Okay, so this is a very big topic we'll run through later on, which is linked to the third point. Okay, so how does interest rate affect property bubble? So the key thing is, for the past 2 years, one thing to note is across the globe, the interest rate have been increased by a huge margin. So when this happens, it helps to curb demand, which is very important because when interest rate is high, imagine you go to the bank, you want to buy a property loan. Last time, maybe you only pay 2K or 3K interest. Now you pay 6K interest. So likelihood of people wanting to borrow more to buy is more unlikely. And this causes the demand to be more stabilized, no longer over speculation, over demand to borrow, as compared back in 2020 when interest rates are so cheap. And this causes the financial affordability to decrease for housing. And this, in fact, some areas across the globe have collapsed. But what happened is that, in fact, in Singapore, because in the first place, people don't borrow a lot loan, it doesn't affect as much. And this is something that we have to take note, because by having a more stabilized economic situation for housing, this allows us to not be over leveraged and a likelihood for a bubble to burst is more unlikely because people are not borrowing as much as last time, people are not too over speculative, and this helped to stabilize the entire housing bubble index, or rather the entire housing market in general across the globe. And this actually links to my fourth point, which I mentioned just now. Okay, my first point is inflation. Okay, so inflation is a very key element you have to analyze. While people think inflation causes people to think things are unaffordable, etc., but one thing to note is inflation actually supports income and rental growth. And it's very important because with inflation, things are going up and people are willing to accept it. Okay, that's inflation. Our income will grow. There's more economic productivity. And when income grow, while inflation rise, interest rate rise, people are likely to borrow, but they can afford better in the longer term run. And meanwhile, inflation also causes rental price to grow. And this across the globe, which allow them people to not be over leveraged, they still can finance a money loan. So this is something that helped to accelerate the entire city, that allow this phenomena of a very sweet spot where the prices are not being overinflated, they grow past the fundamentals. And in fact, something interesting is rental growth, because of the rise in rental, not just in Singapore, which went up 40%, okay, in US, they was reached the highest value, which allows them to sustain the entire market in the long-term run. Okay, and this is very important because the fifth point to take note about this, as mentioned UBS report, is if interest rate were to drop again, which is something Fed is planning to plan, a long-term run 2.5%, okay, if interest rate were to fall, this will cause a renewed boom in many cities, because in a high interest rate environment, people are not buying, people are not selling, so the demand drops, but supply stay same. But what happens is when the interest rate drops, what will cause is that the demand will increase, and this will actually create a brand new increase in the demand for this housing that will cause the price to rise. So this is something that we have to take note, which is very important, called a turning point. But as for now, UBS mentioned, this year it's still too early to see a huge turnaround, and that's something to expect in mid to end of next year. And hence, last but not least, okay, back to Singapore, Dubai, and Miami, there's something we have to note. It's about countries that have strong fundamentals, that is known as a safe haven, okay, where there's so much of political risk. These are known as sought after destination. So I notice is the hotspot international demand, the rental and sale price, okay, the growth stands out in Singapore, Dubai, and Miami. And while prices up by almost 50-60%, rent went up by 50% higher than 2 to 3 years ago, the key thing is if it's supported by a strong economic fundamentals, that's number one. And number two, you must trace where the money is flowing to. If you understand all these things, you do have a head start to look at what exactly is the price growth trend for the next 1 to 2 years' time. So with this, it's very important because if you were to get all this data and understand a deeper analysis of how the economics of Singapore property market actually works, you're able to really be a first mover in this entire market trend. To end this off, Singapore Outlook, if you find this whole entire video very technical, don't worry. The only key thing to take away is that our Singapore property bubble have already now been classified as fairly valued. While prices have risen, okay, what we need to take note is our income and our GDP growth comes in tandem to it, and providing it with a very strong fundamentals that help to support the economical and the housing growth in terms of prices in the long-term run. And one thing to take note is because Singapore is so small, housing supply is limited. The key thing is while demand continues ramps up, which is a very interesting topic to even trace into, that is when if you're able to understand where all this demand coming from and read deeper into all these economical reports, you're able to find a lot of opportunities in the market today. Okay, so with this, we come to the end of this video, and I hope that this will give you a short snippet of what we do in terms of property market analysis, not just about saying wow, housing prices are increasing, wow, this is like wow, prices are always going up. No, we're not saying that. But the key thing is one thing we know for sure at the end of this report is that our property bubble in Singapore is unlikely to burst. It will likely to stay like quite steady. And what happened is that if the interest rate were to fall, it calls for a time for turnaround, which is something that we're looking forward to. So with this, we come to the end of this video. If you like what we are sharing so far about all this technical analysis, do join us in our Telegram below, which will have a QR code right here, so that you can actually join our updated news articles, our home tour videos, and we would love to share more data with you. So with this, we come to the end. My name is Christian. See you next week. Bye.